Want to learn how to trade credit spreads? Then keep watching. Hey, what's good? It's your boy Matthew Michael, and in today's video, we'll be going over how to sell a credit spread. But before we get into the video, please be sure to smash the like button. It really helps to support the channel. And can we get this video to 20 likes? That would absolutely make my day. Also, while you're down there, please be sure to subscribe and hit the bell notification icon so that you don't miss any future content or giveaways. And also, if you're interested in getting any free stocks, be sure to check out the Webull and Moomoo links down below in the description. And one last thing before we get in the video, I'm just going to take my Instagram and leave it right here. Do with it as you will. And without further ado, let's get into the video. Today's video is brought to you by Tiblio, a complete crypto stock trading system with pro level tools, real-time market data and news, as well as the fastest scanners in the market. Tiblio provides traders with the leading tools and fastest data in the market so that you and I can find the best opportunities to maximize profit and build wealth. Today, when you sign up for Tiblio Pro, you'll also get access to my Discord as well as the Tiblio Active Trader Discord for free. Tiblio Pro is only $34.95 each month, or get 2 months free by paying for the whole year upfront at an annual price of $349.50. Not sure if it's worth it? Sign up using my referral link down below in the description and get 7 days for only $1 with all the trades, the trading journal, the screeners, not to mention the Discord and everything else that Tiblio has to offer. I can pretty much guarantee you'll love it. Now back to the video. All right, so in this video, we will be going over how to sell a credit spread. And be sure to watch the end, because in the end of this video, I will be showing you how to actually set up a credit spread live, as well as where I get all of my ideas for credit spreads from. Now that just brings us back to the question, what is a credit spread? And put simply, a credit spread is an option strategy that allows you to profit off the spread of 2 different options contracts. Now these 2 contracts are always going to be on the same expiration date and always going to be for the same stock. So you can't have an options contract for Apple and an options contract for Facebook and make a credit spread between the 2. But while the expiration date and the stock are going to be the same, the 2 strike prices for the credit spread are going to be different. So actually, when it comes to your max profit is going to be the amount that you sell the contract for. If you sell the contract for $30, $30 is going to be the most money that you can make on that credit spread. And now that you know how to calculate the max profit, the next question that I want to answer is, how do you profit from a credit spread? And to answer this question simply, you just want the contract to expire worthless or for it to lose value. Because you sold to open your credit spread, you made your money on the front end, therefore you profit by the contract becoming worthless. Now the person on the opposite side of the contract from you, they actually purchase what is called a debit spread. So they want the opposite. They want the contract to increase in value, but you personally want it to decrease in value and expire worthless. And again, the person on the other side of the trade purchased a debit spread. It's called a debit spread because they purchased the contract. And of course, the strategy we're looking at in this video is called a credit spread because we were credited, we received money to open the contract. Now back to how a credit spread profits. A credit spread is going to profit by it moving away from the strike prices and becoming worthless. So looking at those same strikes from earlier, let's say we have a call credit spread, which would be created by selling the $11 call strike and purchasing the $12 call strike. We would profit off this trade by the stock price going down and expiring below $11. If this trade expires below $11, you will have realized the full max profit. Now on the other hand, with the put credit spread, it's going to be the exact opposite. So this time, instead of dealing with calls, you're going to be dealing with puts. And instead of selling the $11 put strike, you're buying the $11 put strike and selling the $12 put strike. And this put credit spread will profit as the price of the stock goes up or expires above $12. And now that we know how a credit spread profits, let's talk about when to sell a credit spread. Credit spreads are an inexpensive way to trade some of the bigger names and offer a much lower barrier to entry. You can trade a credit spread anytime you want to profit from a stock either staying in a range or moving away from certain strike prices. The great thing about credit spread is the fact that you're able to profit off of credit spreads even when the stock is just staying in a range. This means the stock doesn't have to move and you can just profit off of the time decay. And for those of you that don't know what time decay is just going to be the fact that an options contract loses value the closer it gets to expiration. It loses the value of time. If it moves further in the money, it's going to gain value, but the closer the expiration gets, it's continually losing value to time. So not only do you profit as the stock moves up or down, depending on whether you have a call or put credit spread, you also profit the closer the contract gets to expiration. And now that you know what a credit spread is and how to profit from it, let's take a look at how to set up some credit spreads. All right, so here we are. And for those of you wondering what this is actually Tiblio. I'm on Tiblio on the Safari on my phone. It definitely looks a lot better on an actual computer, but since I'm going to be executing the play on my phone, I wanted to show y'all on my phone. So what I am on is actually their credit spread screener. Right here, click short credit spreads. And just because this is an example, I'm not going to throw too much at it, but I'm going to scroll over and I'm going to sort by max loss. And I see some with a max loss as low as 65. So this is where I'm going to get my play. All right, so the second one down is still a call on the SPY. It expires February 14th, so not this week, but this upcoming week. Scrolling over where it says minus 458, I would sell the $458 call and purchase the $459 call. So I'm going to be selling the $458 call and purchasing the $459 call. So now I'm going to go to Robinhood and we're going to set this up. All right, so we're going to be making a play on the SPY. So I'm going to type in the ticker symbol SPY. Here we are looking at the SPY. I'm going to hit trade options, and the date was for the 14th. So I believe it was sell the 458 if I'm not mistaken. So sell the 458 and buy the 459. And if you're not able to construct a spread like I was just now, it may be because you need to go into your settings and apply for higher options trading. But yeah, after that, I'm going to hit this little arrow down here, continue at the bottom. And then right there, you see total credit $34. So what I'm going to do is I'm going to hit review. I'm going to hit 1 because I only want to do one spread. And you'll notice there's a bid and an ask. You'll want it to be somewhere in between there if you're following Tiblio. Try to get as close to that as you can. Tiblio had it for 34, so I'm going to do it for 34. Then I'm going to hit send, and then I'm basically just waiting for it to get filled, and I will update you after it has been filled, and we'll take a look at what it looks like from there. All right, so we just got filled for that SPY call. I wanted to get in here and quickly show you what it looks like while you're holding it, how you know if you're profitable, how you know if you're up or down. And yeah, let's take a quick look. So right here in the middle of the screen, you see it says SPY 458, 459 call, and it's currently valued at $35, and we sold it for $34. So that would mean that I am down on the contract. And let me show you how that would look. So we're going to click on it, and again, this is going to be the price action. This is how it's been moving over the day. When you sell anything on pretty much any platform, right here you'll see that it says your position negative that amount. So right now I sold one credit spread, so I am negative one credit spread. And as of right now, the equity is negative $36, but they paid me $34 to open up this spread. That's why you see the average credit right here under the expiration date. It says 0.34. This is a question I typically get a lot, so I want to address this right now. How do I know if I'm up or down on the position? Where it says today's return and total return, today's return will just show you kind of how you're doing on a day. If you're holding this over an extended amount of time, you'll notice where it says total return, for instance, that's what's going to be most important. So right now, if I were to sell out of this right now, my total return would be $1. But I'm not going to sell out of this. I'm going to wait a little bit, wait till I'm profitable, and then sell out of it then. And one more thing before we close out of this section of the video, I want to show you how to close the credit spread. Now, personally, I don't like to let them fully expire because there have been some strange things happen to people when they let credit spreads, debit spread, pretty much any kind of spread expire. So I never fully collect that max profit. Usually if it's going to expire worthless, usually I will buy the contract back for $1 which would drop my max profit on this from $34 to $33. But hey, profit is better than having something go completely wrong in your account. So just me personally, I prefer to close out on the expiration day before it expires. And just so you know, the contract will expire at the end of the expiration day. So for instance, this expires on Valentine's Day. It doesn't expire in the morning, it expires at market close. All right, and then now, as you can see right now, the total return is back to 0, so I'm at break even. So yeah, we're looking good, but actually I'm back down again. And now that I've showed you all that, let me show you how to get out of this. So what you're going to want to do to get out of the spread is you're going to hit trade, you're going to hit close. I only have one contract, so I'm going to hit 1. And then this is where a lot of people typically have trouble. So there's a spread on the bid and ask. So if I were to do $34 right now, I wouldn't get filled right away. And a lot of people just put in exactly how it is. And this is where I get a lot of questions. Right now, if I wanted to sell this right away, if you look at the bid, if I tried to sell it 32 cents or 31 cents, it keeps moving back and forth. I could sell it instantly. But right now it's showing $34, and you may have come here because you're like, hey, I can sell it for $34. But that's not always the case. One thing a lot of people ask me is, how do I get out? And that's what I'm going to show you. So when you're getting out of a credit spread, you actually have to buy it back. So you'll notice there's a bid of 32 and there's an ask of 37. And it's a little confusing, but if I wanted to buy this back, it's more preferable to buy it back for $32 than buying it back for $37. Because if I bought it back for $32, that is a $2 profit. If I buy it back for $36 or $38, that is going to result in a loss. And one thing a lot of people struggle with is getting filled. You'll see this number on the right is moving around, and this is the number on the right is the mid price. It's usually going to be right in between the bid and the ask, which is on the left. And if you want your order filled instantly, you can change this number right here to the ask price. And if I hit review and then I swiped up, this will get filled instantly, but I don't want to do that because I would lose money. So if your orders aren't getting filled, try moving closer to the ask price. So in this video, you learned what a credit spread is, how to profit from it, and I even showed you how to set it up. If you learned anything or enjoyed the video, please be sure to smash the like button. It really helps to support the channel. And again, it would absolutely make my day if we could get this video to 20 likes. Hey, go down there and smash the like button. And then for some reason you made it this far and haven't already, please be sure to subscribe and hit the bell notification icon so that you don't miss any future content or giveaways. And if you're interested in trying out Tiblio, which is the website where I get all of my credit spread plays from, using the referral link down below in the description, you get to try out 7 days for only $1. And when you use my referral link, not only do you get 7 days for $1, but you're also really helping to support the channel. So for those of you that use my referral link, thank you. And for those of you that don't, good day to you. Also, if you haven't got your free stock yet from Webull or Moomoo, be sure to check those out down below in the description. And last, but certainly not least, thank you so much for watching, and peace.